If you were born before 1975, I need you to stop whatever you are doing right now and stay with me for the next few minutes, because there is a very real chance that the pension payment landing in your account every single month is smaller than what you are actually owed, not by a small margin. I am talking about hundreds of pounds a month, potentially thousands of pounds every single year sitting inside a government calculation that was done wrong, and nobody from the Department for Work and Pensions is going to ring you up and tell you about it. That is simply not how this system works. The WPA sends you a number, you accept the number, and the money you were supposed to receive just quietly disappears into the background of your life while you carry on assuming everything is correct. Today, I am going to show you exactly why this keeps happening, how to find out whether it happened to you, and the specific steps you need to take to fix it before another month goes by and another payment lands short in your account. Stay until the end, because the final step is the one that almost nobody takes, and it is the only step that actually results in money moving from the DWP system into your bank account. If you are not subscribed yet, do that right now and hit the notification bell. State pension rules, benefit calculations, and correction procedures change every single year, and when they change, nobody from the government writes to explain what it means for your specific situation. That is exactly what this channel does. Now let's get into it. Before I walk you through the details, I want to tell you about something that has stayed with me since I first came across it, because I think it sets the tone for everything we are going to cover today. A retired teacher from Stoke-on-Trent named Margaret had been receiving her state pension for 11 years, every 4 weeks. The same amount dropped into her account. She never questioned it. She trusted that the government had done the sums properly, that the national insurance records on file were accurate, and that the figure she was given when she first claimed was the right one. Then her son, who works in financial services, sat down with her one evening and helped her check her national insurance record online through the Hummersea personal tax account. It took about 15 minutes. What they found stopped them both cold. 6 years of contributions were either missing entirely or recorded incorrectly, covering periods when Margaret had been working part-time and raising her children simultaneously. She had the payslips. She had her old P60s in a folder in the spare room. They submitted a formal dispute to Hummersea. The records were corrected. Her state pension was recalculated. Her monthly payment went up by more than £80, and she received a backdated payment covering the months since she had originally claimed. Margaret's story is not an outlier. It is not a rare administrative accident that happened once to one person. It is one version of a pattern that has been quietly repeating itself across the United Kingdom for decades, affecting hundreds of thousands of people who were born before 1975 and who are either already drawing their state pension or will be very soon, and the reason it keeps happening is exactly the same every single time. Nobody told them to check. Here is the foundation of everything I am going to explain today, because without understanding how the state pension is calculated, you cannot understand how it goes wrong or how to fix it. The full new state pension, which applies to men born on or after April 6, 1951 and women born on or after April 6, 1953, is calculated based on your qualifying years of national insurance contributions. To receive the full amount, which in the current tax year stands at £221.2 per week, you need 35 qualifying years on your national insurance record. To receive anything at all, you need a minimum of 10 qualifying years, every qualifying year you are missing below that 35-year threshold reduces your weekly payment proportionally. And here is where the problem begins, because every single qualifying year in that calculation depends on records that were entered by your employers, often going back to the 1980s, the 1970s, and in some cases even further. Paper records, manual entries, systems that were migrated, transferred, and digitized across multiple decades, and at every single one of those transition points, errors crept in. The WPA and Hummersea themselves have acknowledged significant levels of administrative error within the system. A report published by the National Audit Office confirmed that the WPA had made hundreds of millions of pounds worth of underpayments, many of which were linked to errors in how national insurance records had been processed and applied to pension calculations. The most significant of these errors disproportionately affected women, particularly married women, widows, and women who had reached state pension age and were entitled to claim on their husband's contribution record. The WPA launched a correction exercise, but that exercise has been slow, incomplete, and entirely dependent on the department identifying the errors itself, rather than proactively contacting every person affected and walking them through the correction. Which means that right now, as you are watching this, there are people receiving the wrong amount, and the WPA is not rushing to find them. Now I want to add the second layer to this, because for people born before 1975, there is a specific historical issue that has quietly affected a very large number of people, and it comes down to a category of national insurance contributions that most people have never fully understood. If you were working between the late 1970 seconds in the mid-1990s, and particularly if you were employed rather than self-employed, there is a real possibility that some of your contributions during that period were either not recorded correctly or were recorded under a system that did not translate cleanly when the pension rules were updated. Contracted out. Employment is one of the most common sources of confusion. If your employer ran an occupational pension scheme and you were contracted out of the additional state pension during that period, your national insurance record will reflect a lower rate of contribution for those years. That is technically correct, but what is not always correct is whether the corresponding occupational pension benefits were ever properly recorded and whether the overall calculation of your state pension has correctly accounted for everything you are owed across both systems. A man from Leeds named Graham posted in a pensioner's advice forum earlier this year describing exactly this situation. He had worked for the same company for 22 years, had been contracted out for most of that time, and had been drawing his state pension for 4 years before someone in his local Citizens Advice Bureau pointed out that his online national insurance record showed a number of years that appeared to be incomplete. The entries were there, but the earnings figures attached to those years were significantly lower than what Graham knew he had been earning. He had kept his old payslips in a box under the stairs because his father had always told him never to throw away paperwork, and that habit ended up being worth several £100s in backdated payments. He said that when he first called the DWP about it, the person on the phone seemed surprised that he had the documentation, like they were not used to people coming prepared. That detail matters, because preparation is exactly what gives you leverage in this process. I want to be clear about something before we go further, because I know this information lands differently depending on where you are in your pension journey. If you have already been drawing your state pension for years, I am not here to make you feel anxious or angry about time that has already passed. What I am here to do is show you that there may be money you have not yet recovered, money that is still recoverable, for reasons that have nothing to do with any decision you made and everything to do with administrative errors that were never flagged to you, because here is what most people do not realize. Even if you did everything right, even if you claimed at exactly the right time and have a full contribution history, the payment you are receiving right now may still be wrong because the records feeding that calculation were never accurate to begin with, and that is the fixable part. That is the part the WPRA and Hummer C will actually address if you come to them with the right evidence and the right paperwork. So here is what I want you to do, and this is the section of this video that is worth writing down or coming back to, because these steps in the right order are what move this from being a concern to being a correction. The first thing you need to do is check your national insurance record. You do this by going to gov.uk and logging into your personal tax account through Hummer C. If you have never set one up, the process takes about 15 minutes and you will need your national insurance number and some form of identification. Once you are inside your personal tax account, navigate to your national insurance record. What you are looking for is a year-by-year breakdown. Going all the way back to when you first started paying contributions, you are looking for any year that shows as incomplete, any gap in the record during periods when you know you were working, and any year where the contributions look lower than you would have expected given what you were earning at the time, if you spot something that does not look right, do not assume the system is correct. The system has been wrong for hundreds of thousands of people. Trust what you know about your own working life. The second step is to gather every piece of documentation you can find that supports what you know to be true about those years. Old P60s, payslips, employment contracts, letters from former employers, bank statements from the period in question, anything at all that demonstrates you were working and contributing during a year that looks wrong or incomplete in your record. You do not need to have a perfect paper trail going back 40 years. Even partial documentation covering 2 or 3 disputed years is enough to open a formal investigation and begin a correction. The key is to come to the process with something in your hand rather than just a claim. The third step is to contact Hummer C directly to dispute the errors in your national insurance record. You can do this in writing by sending a letter to the National Insurance Contributions Office. You can call the National Insurance Helpline on 030020033500, or you can submit a query through your personal tax account online. When you make contact, be specific. Tell them exactly which years you are disputing, what the record currently shows, and what documentation you have to support the correction. Ask them to open a formal review and get a reference number for your case. Do not end the call or send the letter without confirming that a review has been opened and that you know who is handling it. The fourth step, and this is the one that most people either skip or do not know exists, is to separately contact the WPRA Pension Service to request a formal recalculation of your state pension once any corrections to your national insurance record have been confirmed. You can reach the Pension Service on 0800 731 0469. The reason this step matters is that correcting your national insurance record with Hummer C does not automatically trigger a recalculation of your state pension by the WPRA. These are two different departments and they do not always communicate with each other as quickly or as automatically as you might expect. You need to prompt the recalculation yourself, and you need to do it in writing so that there is a record of when you requested it. Once the recalculation is done, if there are arrears owed to you, the WPRA is required to pay them. In most cases, that payment comes as a lump sum direct deposit, and the amount can be significant depending on how long the error has been in place and how many years of contributions were affected. Now I want to spend a moment on something that specifically affects women born before 1975, because the scale of what has happened to this group is something that has not received nearly enough attention. For decades, married women in the UK had the option to pay a reduced rate of national insurance contributions, commonly known as the married woman's stamp. Women who paid this reduced rate were not building up their own state pension entitlement in the same way. Many of them understood this at the time, but what many of them did not understand, and what the WPRA failed to communicate clearly when the pension rules changed, is that those women who had reached state pension age and were entitled to a pension based on their husband's contribution record may have been receiving the wrong amount, or may have been entitled to an uplift that they never received because nobody at the WPRA proactively applied it. The DWP's figures, published as part of their ongoing correction exercise, estimated that around 237,000 women had been underpaid as a result of these errors. The average underpayment per person was thousands of pounds. Some women were owed more than £10,000 in arrears stretching back years, and the correction exercise, while real and ongoing, has been criticized by independent watchdogs and parliamentary committees for being too slow, too narrow in scope, and far too dependent on affected individuals coming forward rather than the WPRA proactively identifying and contacting everyone who should be reviewed. If you are a woman born before 1975, who is drawing a state pension based wholly or partly on your husband's record, or if you were widowed and believe your pension entitlement should have increased as a result, this is something you need to actively pursue. Do not wait for a letter that may never come. I also want to address the question of home responsibilities protection, which is something that comes up frequently when I cover this topic and which has caught a very large number of people by surprise. If you were caring for children or a sick or disabled family member between 1978 and 2010, you may have been entitled to have gaps in your national insurance record filled by something called Home Responsibilities Protection, or HRP. This was a scheme designed to protect the pension entitlement of people who took time out of paid employment to care for others. In 2010, HRP was replaced by National Insurance Credits, which work slightly differently. The problem is that for many people, particularly women who were claiming child benefit during the HRP period, the protection was not automatically applied to their national insurance records correctly. In 2023, Hummer C and the WPRA acknowledged that an estimated 210,000 people may have been underpaid their state pension as a result of HRP not being correctly recorded or applied. If you were claiming child benefit at any point between 1978 and 2000 and your national insurance record shows gaps during those years, this is almost certainly worth investigating. The correction process for HRP errors involves submitting a form called CF411 to Hummer C, which you can find on gov.uk. Once submitted, Hummer C will review whether HRP should have been applied to your record for the years in question. If it should, they correct the record, and you then need to follow up with the WPRA to have your state pension recalculated and any arrears paid. The process is straightforward if you approach it methodically, but it requires you to initiate it. Nobody is going to do it on your behalf without you asking. Here is what I want to stay with you when this video is over. The WPRA is not your enemy. The people who work there are largely trying to do their jobs within a system that is genuinely vast and genuinely complicated, built on decades of paper records, manual data entry, and systems that have been patched and updated and migrated more times than anyone can properly account for. But the honest reality of that system is that it makes mistakes, and those mistakes have a pattern, and that pattern has consistently cost real people real money. The burden of finding those mistakes does not fall on the WPRA, it falls on you, and the only way you find them is by looking. If you were born before 1975, your state pension is supposed to reflect every qualifying year of national insurance contributions you earned across your entire working life, correctly recorded, correctly applied, and correctly calculated. Before you close this video, go to gov.uk, log into your personal tax account, and look at your national insurance record, all of it, every year, going back to the beginning. If you see a gap, if you see a year that looks incomplete, if you see anything that does not match what you know about your own working history, it probably is not right. The number to call for Hummer C is 030020035000. The Number 2, call for the WPRA pension service is 080073104469, and if you believe you may have been affected by the Home Responsibilities Protection error specifically, the form you need is CF411 on gov.uk. Send this video to one person you care about who was born before 1975 and is either already drawing their state pension or approaching the age where they will be. One share takes 10 seconds. If their national insurance record has even one missing year, finding it and correcting it could put hundreds of pounds a year back into their account permanently, money that the WPRA has been calculating without ever sending a single letter to explain why the number is what it is. That is what this channel is here to do. I will see you in the next one.